Dr. O, each Monday you file a column for the Center Square Newswire, and it's dubbed the week ahead. There's not a lot happening this week. I mean, there's going to be a lot of talk. It'll be a rhetorical week, but I think the headline of your column, not that it was miscast, is really this: the federal shutdown has darkened the dashboard. That's the lead of your work this week. You're having to put together information largely on your own. We talked a little bit about the challenges of doing that in an episode last week, and yet you soldier on. This week, we will have a lot of Fed governors talking the talk. What are you looking forward to, and what are you anticipating hearing this week? Yeah,
I think the headlines, what we're hearing, when you watch all the, what do you hear from Wall Street, and if you pay attention to all the commentary, it just masks the fact that growth is really on shaky grounds right now. Especially, I mean, we were doing well coming into this year, but I think population growth headed lower. That's going to be a problem. The fact that, we have interest rates that have kind of remained somewhat higher, elevated, is going to slow down economic growth. We talk about tariffs as if there weren't decades and decades of economic research that point to the fact that, well, first there was the uncertainty, and then there's the tariffs. What tariffs are is essentially tax. And there's decades and decades of economic research that tells us that when you tax something, you get less of it. And basically that's also going to slow down economic growth. And so you take all that, you put it together, and you realize that we're on shaky grounds. You listen to the Wall Street commentary and everybody's talking about AI. And yes, there's a ton of AI spending. But it reminds me a little bit, and I don't know. I mean, I could be wrong about this, but the question is how much of it is going to show up in the real data? How much of it is really going to shift the production possibility frontier and push humans beyond the current frontier is a big question mark for me. We're not seeing it yet in the macro data. And so, are we going to, potentially, right? Are we going to see new medical discoveries that are going to keep us living longer? Maybe not just living longer, but working longer, right? Are we going to see all of that? I don't know. And maybe we should do an episode on.
Well, I'd like to do that. I'd like to do that as part of our sequence today.
That's my concern. I think ultimately economic growth is weak. It was already weakening when we had the official numbers. Then private sector data confirmed, this month, even though we don't have the usual official numbers, private sector data is confirming a slowdown on all fronts, whether it's labor or housing. So things are not looking great. And then you hear Fed officials this week. You're going to hear a lot of Fed officials talking. You're going to get the NFIB optimism index, so small business confidence likely remaining very low. Going forward, I think you see a little bit of optimism in the sense that like they expect the rate cuts coming from the Fed to help support them. Especially those businesses that have to refinance, that are coming up on right, that have taken on a lot of debt and that are hopeful to see their borrowing costs go down. You're going to have the National Association of Home Builders also come out with their report, and builder confidence has been drastically low. There was last month we had, the report shifted slightly positive with the fact that, the part that said, future sales expectation. Okay. They expect sales to have hit the bottom already and to be potentially moving higher heading into in 2026. I'm hopeful that's going to be the case. But ultimately, right now, things continue to bounce along the bottom in the housing market. The Fed beige book is going to come out, and there's just like a anecdotal evidence from the districts, the Fed's 12 districts, where basically they go out and collect information from businesses and people in those districts. And the reality is that's been activity in the districts have been very low. I think 8 out of the 12 are showing flat, activity essentially. And so I don't think we're going to see a big boost, in the next edition of this. And so, yeah. And so I expect the Fed officials that speak this week to continue to reiterate the fact that, that there are downside risks to economic growth and that they should be more concerned about the labor market than they should be about, inflation.
So let me ask you this. I mean, you're working without data, at this point, not the data that you're accustomed to working with. You talk about the mechanics of the economy a lot. How did it go this week as far as like you making sense of what's going on out there? What did you have to do that you normally wouldn't do?
I love some of these shows. I listen to, I watch the halftime report, and when I miss it, I'm on Spotify listening to it in my car. And I keep hearing this narrative about strong GDP growth. And like, hey, investors are like, yeah, the economy's strong. Everything's great. And sure, the economy is strong, but instead that growth narrative is standing on shaky ground. If you keep highlighting the Q2 GDP number, right? Everybody's like, oh, Q2 GDP number. Well, Q2 GDP number was mostly the, reversal of imports, right? Imports falling. And then when the imports fall, well, GDP mechanically rises. And of course we expected imports to fall. The businesses basically got ahead of the tariffs, and then, right? So, and then the imports were shot up in Q1. Well, in Q2, they fell, right? And now they're lower than they were before. And so yeah, so you got that going on, but what else do you have going on? Right. And, not a whole lot of much, not a lot more going on. And so, not much more going on. And so you have, consumers are hanging on. And I use the word hanging on because I don't expect consumers to power on, right? Especially not when you have, credit card, auto loan, student loan delinquency rates rising, right? I don't expect a lot of these consumers to power on. I expect them to hang on, right? And so all of that is playing itself out. Then at the same time, if you have fewer people coming from abroad, right? Net immigration is lower, right? Well, you're going to get softness in housing markets. Less demand for housing. There's going to be fewer people, looking for rental apartments, right? You got all this softness going on. You're going to have less labor supply. That's for sure. And mechanically, even if you held demand fixed, mechanically less supply means lower employment growth. And people are like, oh, it's no big deal. It's the supply side. But actually, when you look at the demand side, you see weakness on the demand side as well. How do I know that? Look at the breadth of job creation in the past few months, right? I think only 4 industries added jobs on net. The rest didn't just hold their employment levels constant. You saw declines in employment in all of these other sectors. That's another issue, right? And I think in the column, I went and said, hey, let's take it a step deeper and let's look at the production function, right? In economics, we try to estimate the production function. You look at the production function. What do businesses do? What do they take a bunch of inputs, right? Labor, capital, materials, they mix them up together, add a little technology, right? And you get the outputs, the stuff that we consume. And when you look at that, what do you learn? Well, you learn that there hasn't been much. I mean, in fact, TFP or like the measure, the part of the production function that measures technological progress.
Right. And, total factor productivity, just to be clear.
Productivity.
Yeah.
That's right. Yeah. It is actually lower. And we had this big boom in it. All this AI spending, it's not showing up in total factor productivity. Right. And so, you know, what does that tell me? That tells me that economic growth is not expected to be very strong going forward. Okay. It's not yet anywhere. I'm not seeing it. And so, then of course the labor component is frozen, if not, you know, stagnant, and could even decline going forward. Right. You know, I just highlighted that. And so all of that is to me looks like economic growth that is not only been slowing, that is weak, that is not expected to reignite. And so, right, potential GDP is lower because of lower population growth, because of, very low, if not lower, total factor productivity. And so I just don't see it. I just don't see the narrative of, hey, let's invest a ton and spend a whole lot because we're going to get all of this growth. It's not there yet. And so fingers crossed, right? Fingers crossed that Wall Street's right. Otherwise, we're not in for a good time.
Well, I appreciate your thoughts. There's a lot to unpack there in the next couple of episodes. Let's try to do that. I mean, you are somewhat operating in the dark, as is just about every other economist at this point. You don't have a lot of federal data to work with. I appreciate the fact that you're grinding. All right. We'll be back with some more episodes. Hang in there with us. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever you get your podcasts. Make sure that you listen to Orphe and me each week on the Center Square Radio Hour.